us to talk about? He said he wants us to talk about the range, the new structure, the range structure, and then the structural range, the new range, and recent range, right?
Yes.
So I'm going to be using the drawing it out first, then we'll go to chart for examples. So now I'm going to use both bullish and bearish example. So let's have it like this. So now for the bullish example, in a range, a structure, you know, the moment you start having higher highs, higher low, higher highs, higher low, higher highs, right? So yeah, let's assume that this is a single structural leg, and this is a single structure. So this become what? This become your swing low. Where is your swing low? This is a swing low. Why is that place a swing low? Because that is the place the buy started from. This was the place. The buy did not start from here. The buy started from here. This was the place I started drawing it out. Let's assume that, okay, you know what? Let's do something like this so that it will be much more clearer. So let's assume that this is the point of demand and price has been selling to the downside. And then all of a sudden, we started having higher highs, higher lows, higher highs, higher lows, and higher highs. You understand me now, right?
Yes.
So what do we have here? We have what? What do we have here? And this become what? This low become what? A swing low, right? It become a swing low, right?
Yes.
So the moment price start trading back to the downside, and we broke below this low. So is this low a break of structure to the downside?
No, not yet. Just to take out the internal
liquidity. So now, if this is the internal range liquidity that was taken out, you remember when we had this break of structure, what do you think happened here? What do you think happened here when we had this break of structure? What happened here?
After breaking the structure.
What happened?
Change of character.
No.
Okay.
There was the thing is, for price to keep moving from a swing point to another swing point, it involves buyers and sellers. There are people buying, there are people selling, there are people buying, there are people selling. So for price to keep moving from this swing point to this swing point, from this swing point to this swing point, buyers got involved here, seller got involved here, buyers got involved here, seller got involved here. And sellers indicate supply, right? Buyers indicate demand, right?
Yes.
So there's definitely going to be a supply here that failed, right? So price came, took out the internal range, price started reacting from the demand. So what happened to this demand? This demand is what? It was this demand that led to the supply to fail. So this was the last demand that was printed that led to the supply to fail. So immediately price started moving to okay, let me draw it very well. So, for price to come and take it, we are definitely going to have this, a lot of pullbacks, right? So price tap into the demand. So when price tap into the demand, price started moving to the upside and price broke structure to the upside. So now this high become what? Your recent high. This low become what? Your recent low. This is the range you will start working with. Why is this range valid? This range is valid because this high has taken out internal range liquidity. This low has broken structure to the upside. So this is a range high, this is a range low. Then you start working within this range high and this range low. Are you there with me? We are not going to be working with this. This is not, we are not working with that. Your focus is the high that was printed immediately price took out internal range. When price was buying, and all of a sudden price reversed to take out one low, automatically this high become valid. You start working with this high. How do you know that this high has printed a low? It is when you now see what? another breakout structure to the upside like this, then you now know that, oh, this high has printed a valid low. So meaning that this high has taken an internal range liquidity, this low has broken structure. So you start working with this high and this low. Now, you might be wondering, what now happened to the swing low? Now, you are not working with the swing low now. You cannot start drawing something like this. Price might not even come into the discount. Should be this one. This one is just ordinary drawing. Price might not come into the discount. Your focus will be this range here, right? This range here we are working with. So now, after that range, since you know the range you are working with, what do you want to do? What do you want to do with your range? Why are we using a range?
To determine discount and premium.
Determine discount and premium. So what do we want to do from discount?
To buy from discount.
What do you want to do from premium?
To sell from premium.
Now, when price started buying from discount, if price start buying from discount, let you engage into the buy, where will be your target? Or norms, where is going to be your target?
The recent high, like the last high.
The recent high is going to be our target, right? So this become the external high. This become the internal low. So this is the internal range liquidity. This is the external range liquidity. So price took out the internal range liquidity. Where is price coming for? Where is price coming for?
The internal.
From where is price going to?
After taking the external.
After taking the internal, where is price going to?
Okay, going to external.
The external. Now, after price has took out the external, right? Now, this is what, do you see how we got into the buy using our recent range? So this becomes the recent range, right? Now, how do you now determine your new range? The time you will start working with your new range, it is when price tap into the discount of your recent range. You know, this is our recent range. So when price started buying from the discount of the recent range, now instead of price to now go for the external, normal, price was supposed to go for the external, but instead of price to now go for the external, price started giving bearish intent inside of the premium of this range. What do you think price wants to do? Let's assume price swept the liquidity, price gave another manipulation, price brought structure to the downside. What do you think price wants to do? Right? What do you think price wants to do?
Sell back to...
Sell back. So meaning that this demand here, meaning that this demand that price reacted from is going to fail. So this is now going to become what? A breakout structure to the downside. Are you there with me?
Yes.
So instead of price to go, when price started buying from here, instead of price to come for the external, price started selling. Price started selling from the premium of this recent range. So what do you think price wants to do? Price wants to sell. Now, this is when the new range now come in. So this now become your new range from this low to this high. Now become the new range. Why? Because this low, like I said, this low has broken structure to the upside. This high has broken structure to the downside. So this is a range low. This is a range high. So this now become the new range. So what do you want to do with your new range? Do you want to start selling from the discount? No, you want to sell from the premium. You will not sell down. You know that, okay, this range here that was printed, this low that was printed from this demand, is not ready to go for the external. It seems price is still interested in selling. So that is why you start working with your new range. So your new range, it is when you now want to sell from the premium. So this is your new range. Now, the time you will now start working with your structural range, you know, I've explained this as what? What is this? Sorry. Right? What is this?
Yes.
Now, the moment price now broke structure to the downside, that is where you now start working with your structural range, swing range. So you now know that, yes, you now start working with this swing low, and where be no swing high, this will now be the swing high.
Wow.
So this will now become the structural range. Right? Simple. Let's use the bullish. Let me just change this to bullish. Same thing for the bullish. Abi? No. I'm going to draw it out so that you're not complicated. Same thing for the bullish, for the bearish scenario. Okay, this is, okay, same thing for the vice versa too, still the same thing. Let's assume, okay, this one price was buying. Let's assume price was selling before, right? So price was selling before, after price sold to the downside. Okay, let's say price was buying before, and price now tap into a zone of supply, right? If price was buying before, price now tap into a zone of supply, price started selling to the downside. We had the sell, then we broke structure to the downside. So what is this? We had the break of structure. So what is this low? Your swing high. What is this? Your swing high. That is the high that is coming from the supply. You have a swing high. So the moment price started reversing back, the moment price started reversing back, like this, and eventually price took out this. Do we have a break yet? No. Price only took out what? Price only took out what? Internal range. So as price took out internal range, what do we have? We have a recent low, right? So as price took out internal range, price started giving confirmation. We started having confirmation. So price broke structure. So what do we have now? We have a recent high. So what is this? Our recent range. From this low to this high become the recent range. So what do you want to do? You want to sell from the premium. So immediately price started selling from the premium, you know, on norms. What do you want price to go and do? To go and break another structure, Abi? To go, Abi? Yes. So instead of that, price started coming back and price started reacting from demand. If price started reacting, instead of for price to break it, price started reacting from demand. So what is that showing us? It's showing us that, oh, it seems price is not ready, right? So what do you want to do? You can engage in the buy. Then expect price to come and take out this low. So after price took out the low, so what is this? A break of structure. So, okay, I did not explain new range. So now this is it. After price started reacting from demand, so we had another break. So what is this? Our new range. So our new range is from where? From this last high to this last low. That becomes the new range. So now after that, if price now continue the buy and we broke outside, so that is when you now start working with what? Your structural range. Are you there? That is when you start working with your structural range from this high to this low. Let's go to chart example, right? This is Rwanda. Okay, let's look at I do not really, let's just look at vast example. It is just everywhere in the market, right? First, we first identify a swing structure. Let's go to 1 hour. There will be multiple examples from 1 hour. Let's first identify a swing structure for 1 hour time frame. All right. Very, very good example. Very, very good example. You know, this is the turning point when price started buying. This was the turning point when price started buying. Are you there? Are you there?
Yes.
This is the turning point when price started buying. So what do we have? We have a swing low, right? A swing low. Now, price continued buying. You see all the moment that price was buying. Did price take any internal range? No. So is this a change of character?
No.
That become the what? Price took out one internal range. So automatically our recent what? Our recent high is being confirmed. Right? So how do we know our recent low? If you have a recent high, how do we know our recent low? Identify the last place we had the break of structure. This was the last place we had the break of structure. So when we had a break of structure, you know, what did I say that happened here? A supply failed, right? What got in control? What got in control?
Demand.
Demand. Now, when demand failed, this was the last unmitigated demand, right? This was where the supply failed. You can see how price ran the mitigation, and this was the last unmitigated demand. So as price came to cut the internal range, price came into the last unmitigated demand. You can see how price came into the last unmitigated demand. So this now become what? Your recent high. So this becomes the recent low. This becomes the recent low. You can see that I'm not working with this. The only time I will get to work with this is when price fill my recent range. Do you understand? When price now come, instead of for price to buy and take out this high, Instead of that, price now failed it. So when price failed my recent range, that is when I will start working with this and this. Are you there?
Yes.
So now, since the recent range is still intact, then I'm going to be working with the recent range where I had the last break of structure, where demand, where supply field. Just flip entering stuff, flip model. What they use, I hardly use. You see that I hardly use that word flip, right? It's just based on logic, right? When supply field, demand got in control. So price gave me this high. My high is confirmed immediately. What? This high become confirmed immediately. What? Immediately what happened? Immediately what? Why did I confirm this high? Are you there? Hello?
Once it takes out internal range liquidity.
Yeah. Well, immediately it took out the internal range liquidity. It's confirmed, right? I have this high as my valid high. So when did I have this low as my valid low? Right? Immediately it broke structure to the upside. Right? I started working with this high and this low. And the next thing is what? You can see that if I start working, if I start working with this and this, you can see that price did not get to the discount, right? That is when it will now look as if, but price did not tap into the discount now. It's because you don't know how to identify your range. You can see that if I was working with this swing low and this high, you can see price did not tap into the discount. Price started buying from the premium. Do you understand now? It's because price tap into price is working with the range, with the recent range. You understand? So you can see how price pulled to the upside. We had another buy, right? That is where price is currently. That is where EU is currently now. Is now. That is where price is reacting from now. EU, right? You can see how powerful this range is. Where price switched, when there was a switched, when supply failed, demand got in control. You can see. You understand now. Let's look for more example of where we that here our recent range did not fail. Our recent range was respected. It is when your recent range want to fail, that is when you now know your new range. Yeah, that is when you start working with your new range. So let's look for another example. Let's go back to past price action. Let's go back to past price action. So we first identify our swing structure, price scheme. Let's see this. This was where demand got supply. Okay, we went for the recent range. Okay, started reacting. Okay, we went for the recent range. We bought. You can see how this. Let me use a replay too so that we can easily identify this. You can see how these two play out well. This was where supply started. Demand got in control. Where we started buying from, right? So we broke structure to the upside. So what happened when we break structure? Supply failed. What happened? Demand got in control. You can see how price came, took out the internal range. We took out an internal range here. So immediately this high is confirmed. Started working. This was the last high that took out the internal range. So we started working with this high and this low. You can see how price came. Price started buying. You can see how price swept liquidity. We started buying to the upside. And then we bought. So what do you expect price to do? We expected price to go take out the recent high. So this was the recent high printed, though it does look like the super of liquidity, but this was where we had the break. So what do we happen here again? Want price to continue the buy, order flow, right? So once it failed, what happened? Let's see if it is going to fail. We need this to fail. So what happened to our recent range? This was our recent range. What has happened here?
It has failed.
It has failed. So we have what? A BOS, right? We have a BOS, a break-off structure. So immediately we had a break-off structure. This was where the demand failed. What do you think will happen? Supply got in control. Then you continue the sell to the downside. That's okay. There's possibility price might come here. We want to continue the sell to the downside. You can see how price sold to the downside, and then we failed, breaking another structure to the downside.
So the swing low now.
Yeah, we now failed the swing low now. It shows that price is bearish. Swing low, price is bearish. Then this high now become what? A strong high. The high become a strong high, right? Yeah. So it shows that we are bearish. Now, you should have engaged. You could have engaged into this buy from here, understanding your recent range. When we have a break, a demand got in control, internal range liquidity was taken. You should have engaged in the buy from here, right? You should have engaged in the buy from here when you understand it. You understand that supply failed from here. What do you want to do? You want price to retrace back and what? And continue the sell. Let's see if that happens. There's the example set. Okay, this is it. You can see our price continue the sell from here. You see that?
Yes.
This was where the demand failed. This was where the last demand of our range, our recent, you can see how powerful the recent range is. This was the recent range that failed. If price wants to continue the buy, the recent range should hold, and the swing low should not be broken. Immediately the swing low is broken, supply got in control, demand has failed. You can see our price came there. This was the last place we had a switch, and then we dropped, breaking another structure. Do you understand? There are a lot of examples on every pair. This is usual, but in fact, when I started studying this range of 18, I observed that it was more on, it was from JPY pair. I started gathering the data then. That was earlier this year. It was from JPY pair. You can see the same thing JPY is doing now. External, let's go back. In fact, there was a trade too as well. Just understanding my recent range. I think it was on GJ. Let me go back to GJ. I think it was last week. No, it was this week. Yeah, it was this week. Let's go back to this week. Let's go back. Let me remove all of these, Charlie. Let me cut out the. So let me go down to lower time frame and then activate the Asian rate. So this was Monday price action. Monday price action. What I was expecting is what? A breakout structure. Immediately a breakout structure happened. What happened? When we had a break, what happened? Our low, swing low is confirmed, right? This was the last swing low. Abi, are you there? Are you there,
Yes.
Joe? Are you busy?
No.
Okay, so this was on Monday. What happened? Our low is here. But I was not using this low. I was working with this range that was printed here. Right? I was working with this range that was printed. So on Tuesday, during the Asian session, we had a sweep. We had a break of structure to the upside. So when we had that break of structure, you can see we had a demand, what is it called? Demand in control.
Yes.
Okay, no. Okay, it was around here. All right. So we had another break of structure to the upside. Let me zoom out. So we had another break of structure to the upside. Yeah. So price gave another low there. This was where the last demand was mitigated. So price gave another low. So on the lower time frame, what will be my expectation? What did I need to see? I just need to see internal range liquidity that was taken. Immediately internal range liquidity was taken. I don't need to, the thing is liquidity. You can see that this low here came into this demand, and then what happened? After the low came into the demand, you can see our price drove down again. What did price did? What did price did? Price came into the extreme. What is this? Internal range was taken. You can see we had a push, we had a pullback, and we had this, right? A break. This is the internal range. It's just like we had a push, we had a pullback, and we had this. This is the internal range. Price took it out. Immediately price took it out. What did I want to see? A shift in structure. I will just buy from there, right? I just want to engage in the buy since I know that the order flow is bullish. So I did not start using my range and start coming from this swing low. I did not start doing something like this now. It's not possible for me to start doing something like this. It is not possible. It doesn't work that way. You start working with the range price is presenting each time. Each time price presented a range, you work with it. Each time price presented a range, you work with it. So immediately internal range was taken. What did I need to see? A break of structure to the upside. Once I say a break of structure to the upside, what happened? My low is confirmed, right? My low is confirmed. Where is now my new range? You know that this high has taken an internal range already. Confirmed high.
Yeah.
This low has broken structure to the upside. Confirmed low. Will I start buying from premium?
No.
What did I want to do? Buy from discount. My point of interest, go to lower time frame. I don't want to go to mono. On lower time frame, it swept liquidity. That is all I need to see. It mitigated the point of demand. What else did I need? What else did I need? Inducement. You can see how price tap into it, right? Price still tap into it. And price still came back because price need inducement, right? Price still came back and price used this as inducement. Price took it out if you check well. So this low was even the inducement itself. You can see. And then we continue the buy. You can see how price retraces back. Again, where is my target? My recent high. My recent high is going to be my target, right? This high, which is the recent high. And did price get there? Yeah, this was on Tuesday. This Tuesday, tap on this Tuesday. I could remember very well. You can see, I did not say, oh, let me start working with this low or even this low. No. No. Did you understand?
It's very insightful.
So, am I permitted to upload this video on the public channel? I just felt I should.
Sure.
On the public or not the private too.
Okay. No problem.
So that is how range work. That is how you determine your range structure. Just anytime, you know, what we need is liquidity, right? Liquidity. Let's look for is everywhere in the market. Is no matter the time frame. This one that I use now is 5 minutes too. You understand? So let's look at, you know, let's look at another. Let's take a look at another example. Let's move to our time frame. You can see, but in ahead now, what happened during Asian? This entry, price came back to took out the low. So that means that low was even the main inducement, right? So price came back to took it out and price started buying. You can see how price did not come into this, or price did not come into this. Price was still working within this low and this high. So that is when price started working with this low and this high. You can see how price come into the discount. I'm coming. Let me zoom out very well. Let me explain that side very well. Let's move to 15 minutes. So this was the entry we took on Tuesday. Wednesday, Asian. So price came back. So price came back and swept this low. So meaning that where immediately price took out this low again, which range will you start working with? Where is your range? If I was on the charts, this now become my range high. Where is now my range low? You know, we had this marked out. We had this marked out before. So you now start working with this and this. That is how you start shifting your range. If price took this again, which one you start working with again? That is when you now start working with this one we had marked out on Monday. Are you there? So each low is a range. Each low is a range. Once price start taking each low, you start shifting it until the swing structure itself now got broken. If price came and take this one again, which one you start working with again? I think the last low. If until the swing, where is the swing? This is the swing low, I think so. This was where the bullish move started from. Yeah. So that is how you start shifting your range. So now you can see you start working with this range. So what do you want to do? You can see how price came into the discount. Right. On Wednesday, I was looking to buy. So I had this marked out on Thursday. Was it on Wednesday? Right? This was my inducement. And then this was the entry, but price did not come there. Price came into the flip entry. Is it flip? Yeah, I think so. I don't used to use this kind of entry though. This was what price came into and price bought. And it was even 7 a.m. I was still looking at USD pair that time. The first pair I should look at is USD pair, not JPY pair. Right? You can see price broke structure. Where is the new low? This is the new low. Where is the new high? We don't have a new high yet. Where is the new high? You can see now immediately price started selling. We took out one internal range. You can see how price came here and started buying on Friday. Yeah, price started buying from there. That was where price, because this was the last place we had a switch, right? So that was where the old bullish price started switching bullish again. Just determine your range structure, right? Are you there? So this was where price started buying on Friday. So I don't know. Let's still see another one again. Okay, I think another thing happened here again. This sell here. Another thing happened. We started selling from here. We had a swing high. So when we started selling, price took out this internal range here, because why is that my internal range? That was the last low. This was the last low that led to a break of structure. This was the last low that led to a break of structure. So price took out this internal range. So we had a high here and price started selling. So generally, price now took out this low here, right? Why is that low? Because from the higher time frame, that is the only pullback we had. So this is a single leg from the higher time frame. So that is the only obvious pullback we have. So we started switching bullish from here. So we switched bullish from here. Immediately we switch bullish. What ahead? This is the new range I was talking about. Very good. You remember what I said about new range? Do you remember? This is my new range. When price started buying like this, when price started buying, price took this out. So after that, what is this? What do we have? We have a recent range, right? So we have what? A recent trend from this high to this low, right? So what do you want to do? You want to buy? You want to continue the buy, Abi? So
Yes.
Where do you have your new range? Where do you have a new range? You have your new range immediately. Price refused to take this high. When you started having a switch, then you know that, oh, it seems price is not interested in taking this. Then what happened? You sell. So what do you now have?
Break of structure.
So what do you want to do? So that is, you can see how our recent range failed and the new range got in control. The recent range failed, so this becomes the new range from this high to this low. So what do you want to do? You want to sell from the premium, right? So that is the exact same thing that happened here. So now immediately we started buying. What do we have? We have a recent low and we have a recent high. So we have a range from this low to this high. Now, this is our recent range. You know that on norms, when price started buying, what do you want price to do? What do you want price to do on norms when price started buying? When price started buying, what do you want price to do? You know that this becomes the last point of demand. I could remember I said I was looking for buy here, right? Why do I want to buy? Because price has taken out internal range liquidity. Price has broken structure to the upside. I'm working with my range. I want to buy from discounts to where? To my external, right? So, what, if you remember this sell, I spoke about here too as well, that because we are not in the premium, I was like, okay, there is possibility that we can still sell to here and we buy. This was my expectation, right? So what happened? Did price sold from premium? You can see how price sell from premium. You can let's zoom out very well. The sell happened in premium, but it happened during Asian, right? You can see it happens during Asian. I've turned on my Asian range. The sell happened, all the sell, 1, 2, 3 of them happened during Asian, and immediately London opened. We had this push. But what I'm trying to say is that it happened from the premium of the recent range. You can see how it came from the premium, not the discount. It sold from the premium and we had it sell to the downside. So we failed this, right? So we failed that, and then we started buying, I guess, news. All these ones were news. All these things were just Asian. As JPY pay now, it's more like Asian pay. So hope you understand me now. Joe, this session is going to end now. So did you want to ask any other question? You can always revisit the video and watch it again.
I don't. Are you uploading it anytime?
I'm uploading immediately so that I'll not forget you. Yes.
Okay. No problem.
So do you want to ask any question?
No, not really. The only thing I've observed, I think to every of your entry, you always inducement is part of the criteria.
That is it. No inducement, no entry. That is why I wrote that trend on Twitter about inducement. No inducements, no entry. It make it high probability. That is like a rule, part of a rule.
I will appreciate if it can be uploaded anytime. So I will work on it this weekend, and maybe I can send you some chart examples.
All right, you send it on Discord.
Okay. Thank you so much.
You're welcome.
I'm very good.